First things first, my apologies. I know I have lapsed on the stock picks thing for a couple weeks now. This is the second time I've lapsed on it. I don't intend to lapse on it, it's just that I get tied up with other stuff and end up not doing it. So I'm gonna make up for the last couple weeks by doing requests, and the requests are to analyze some good cheap stocks to get in on. So without further ado, I'm going to put them up here and you can take a quick look. And we're going to analyze these stocks from a technical standpoint, but we're also going to look at the stocks themselves to figure out what they are. Okay? So all of these are penny stocks, they're all under $5. We're going to start by going to Morningstar to figure out what they are. We really don't care what they are, but it's good to know because if you're doing position trading or if you're holding on to these stocks for a while, it's beneficial to know what you're invested in. So the first is AVXL, and we're also going to be using stockcharts.com for our analysis. AVXL is a life science company. Morningstar will tell you pretty much all the fundamental stuff that you need to know, whether they have a dividend, what they are compared to the industry, so they're much more expensive than the other life science stocks relative to what they have. Still, it's cheap. Over on the down here, it'll give you a summary of what they do. So they're a clinical stage biopharmaceutical company, generally a penny stock that is in the biotech industry. Biotech um, moves when you have a lot of investor support. It doesn't need to have a drug out on the markets. It just needs to have a lot of hype. So getting in on this is good if you see a sudden movement in the stock, and that's what we're looking for with the technical stuff. We're looking to see whether it's moved from a sideways position to a sloping upward position, because if it does, then there's a very possible breakout occurring. So here's how we're going to analyze all of our stocks. We're going to type in the symbol here. I've enlarged this for easy reading. We're going to be looking at a couple things. What I mean by I want to make it up to you guys for not giving you penny stock or giving you picks for the past couple weeks is we're going to do both a swing trading analysis and a position trading analysis. So we're going to be looking at what will probably occur in the next coming week, but we're also going to look at the position for this stock in case you want to hold on to it for a longer time. So to do that, we're going to switch the parameters of the simple moving averages to 20 and 30. Those are good for both swing trading and position trading when we switch out daily to weekly up here. So it's quite useful. And we're going to look at a few different indicators. First, we're going to go down and select slow stochastics. That's going to tell us whether the stock is oversold or overbought. In the middle, let's go with the Chaikin oscillator. And at the bottom, we're going to go with the Arun lines. Okay? I'll tell you what these mean in a second. Alright, so we'll look at the daily charts. Stochastics say that it's at a decent level, it's not oversold. The stock has been moving up. If you look at the averages, the shorter of the two, the 20 line, is above the 30 line, which means that we have a pretty clear upward momentum. And the price of the stock is above both of these. So this is looking like we have an upward momentum in place. You could also look at the MACD line if you want to ensure that a momentum is in place, but I can tell pretty clearly that this stock has been moving up. We don't care about the Chaikin oscillator for the daily, but we do care about this Arun line, and this is really the only worrying signal. It's not that much worrying because the red line and the green line are both going down in tandem, but the fact that the green line is approaching the 70 level is a little worrisome. But before it is approached and reeled back, and it has fallen under and reeled back, so I'm not so worried about that. Based on the technicals, I'm going to say that this looks like a good swing trade at the very least. There's a possible breakout occurring, and for a position trade, we just want to look at what's going on weekly. We see that it's oversold from a weekly standpoint, but the stochastics don't matter so much when we're looking at a position trade because it's always going to be oversold when we have a strong upward momentum. What we really want to look at is the oscillator. If the oscillator is really high above the zero line, then we're pretty confident that this momentum's probably going to hold for the long term. And you can see the Arun lines are separated by a very large degree. So this looks good even from a position trade standpoint. So I would say get in on this, buy the penny stock AVXL, hold on to it, and if you want to watch and figure out when to sell it, you got two methods. Use the weekly and watch this oscillator here, make sure it doesn't get too close to zero, or you can use the daily and ensure that the stock price both stays above these moving averages and doesn't move up into that above 80 stochastic region. Okay, so that is AVXL. Next we're going to look at, I don't think this is a penny stock actually, LNG. This is a energy stock, right? It's quite highly priced, but some people have asked me, like, should I invest in oil? When's a good time to get back into the energy stocks? Well, I don't think it's a good time to get back into oil right now, but LNG is looking pretty good in terms of its technicals. It is an energy stock, so it's a bit risky at this time. It doesn't really tell you much about what they do. You can look into that on your own. It seems to be a bit overpriced in terms of its fundamentals, the earnings and assets. Let's see here. Well, income's going up. You could check this out on your own. I don't want to do this because it takes too long for me. The main worry I have with this stock is its beta is so high, which means that if the market crashes, we are going to see a huge crash in Chesapeake. So if you are bearish on the market, this is probably not a good investment. But from a technical standpoint, it looks pretty good. It was approaching these oversold regions, but it's not oversold anymore. It's kind of evened out. And what we're seeing here is we're seeing a clear cross from the Arun lines. The green line has moved over the red line in the past. We probably missed the best buying point, which was, if you just scroll up with your mouse wheel, which is probably down here at 66, but we're pretty close at the same time. I think this is a better position trade because, as you can see, we just got out of the oversold region in the position area, and we're probably moving upward from there. One of the problems is, though, that the stock price is below the moving average, but some people might say because of this we're buying at a discount. It really depends on your viewpoint of how to price the stock. But overall, my main reason for this being a good position trade is we can see this Chaikin oscillator moving above, finally moving above the zero region. And if it really does that, what it means is that there's a lot of money that was flowing out of the stock now coming back into the stock. In other words, investors are becoming more confident in this stock. They probably got out after this long upward momentum for some reason, and it looks like people aren't really scared of leaving and taking their profits anymore, and a bunch of new investors are getting in, and hopefully that will bring Chesapeake Energy back up as long as the market doesn't have any problems as a whole. So if you get in on this before all of these other investors get in on it, you can ride another trend just like this upward. Of course, this is more expensive than the other stocks I'm recommending, but I typically don't do a full penny stock update, so I wanted to throw at least one moderately priced stock into this list. Alright, we're going to move back to penny stocks. IBIO. I have no idea what the stock does. All of these were done by technical analyses to put them in my list. iBio, you can imagine that's a tech stock, biotech. Yeah, there you go. Biotech. So again, biotech penny stock is going to move upward if you have a lot of investor support or a lot of hype behind it. We don't care much about beta or anything like that for this type of stock. This stock is all about hype and looking at when to get in with the technicals. When you're looking at this type of stock, you don't care so much about the technicals as much as the fundamentals. In terms of okay, there's really three things you can look at. You can look at fundamentals, you can look at technicals, and you could also look at rumors slash hype slash news, all that kind of stuff. For penny stocks in the biotech industry, you really want to look at the investor support of that stock and then use the technicals to determine whether it's a good time to get in. Now, if you can see the weekly, stochastics show that the black line has crossed above the red line and is now moving out of the oversold region, which means that this is pretty good for a position trade because it's saying that if the momentum goes upward, then there's really no reason for the stock to fall back down. It's kind of equivalent to saying that the Fibonacci's are not bearish, if you're familiar with that term. We had a very brief time in October 2004 where the stock had a very nice pump and then a subsequent dump. We might get in on a subsequent pump and dump. That would be nice, and we can get out at a similar price. You could put a sell limit order. As you can see, the Arun lines are not giving us a buy signal, but when you switch it to the dailies, you see a nice gap here, and that gap came with a green. It's hard to see, but this is actually green. That gap came with a green bar, and because the stock was going down before that gap, and now the gap has brought us to a new region outside of this relative trading region, we would say that this is a breakaway gap, and generally breakaway gaps move upward over time, and that's what I'm suspecting here. Unfortunately, in the past week, we saw the stock moving down a bit, but the stock price is over the moving averages, and as you can see, we finally had that green Arun line cross over the red Arun line, which is a buying signal. The only worrisome thing is that they're trending with each other, but that often happens with the Arun line. But I think this is probably a decent swing trade as well as a position trade. I would say this is probably a better position trade because we're not sure when that next pump and dump is going to happen. But if it does happen, you probably want to set your limit order at somewhere around $3, which would give you 300% profit. For a swing trade, you wouldn't even need to go that high. I would say swing trade, set yourself at 0.95, which is where the last pump, the last jump from that gap set us at. That's the power of the bulls at the moment. So if you're planning on swing trading, buy this, put your limit order as a sell order at 0.95, and you could take a pretty quick profit. Now in the long term, I'm not sure what's going to happen with this stock. It looks like it's been kind of oscillating around the 0.9 region, and recently it's had a dip. But it's a biotech stock, and if some news comes out about it, it can easily jump like it did last time all the way to $3. That would give you about 300 or 400% of what you put in. Next is CRMD. The fact that it has MD in it makes me suspect this is also a biotech stock. Cormadix. Alright, so it's a penny stock because it's below $5. That technically makes it a penny stock. It is, again, biotech. Yep, medical device. There you go. So we're looking at a lot of biotech stuff. It's cheap relative to industry standard if you're looking at price per book, but it's expensive in terms of price per sales. So that really tells us nothing. The beta is negative, which is surprising, but because it's a penny stock, it's not so interesting. That's to say, well, if you see a negative beta for a stock, what it means is that if the stock market crashes, you're likely to see the stock jump in price. But that's not really true here. I think really that this stock is uncorrelated with the market, and we just out of random chance see that we have a strong negative beta here. We're going to look at the technicals of the stock because that's what really matters. It's been bordering on a oversold region for quite some time. What we really want to see is that black line get above the red line and start moving upward. We haven't seen that yet. We've seen a very long downward trend, and that has continued for a while. So the fact that I'm recommending this is basically saying that I think we've touched a bottom here. As you can see, well, let's look at the weeklies, because this would be a better position trade than a swing trade. Alright, so in terms of the weeklies, this has been oversold for a while. In terms of the dailies, it's... I kind of forget. In terms of the dailies, it's pretty much close to oversold. So it depends on your interview, or your interval of choice. But as you can see, if you look back at a further time, it's more or less a upward trend. For the long-term trend of the stock, it's upward. For the more shorter term, when you look at the dailies, you're basically cutting it by 1/7, and you're seeing a downward trend. So it's not like this is a company that has recently fucked itself over like AMD has. I'll show you AMD, and it's going to pretty much go down forever. Um, this is probably a decent stock that changes as the news changes. So what we're seeing here are some very interesting symbols, indicators, I'd say. And most importantly is the fact that this oscillator has hit an all-time low and has begun to come back. Now it's coming back slowly towards zero, but it's getting close to zero. And my prediction is it's going to hit zero soon. You can get in now at I would say probably a discounted price, or you can wait until it hits zero, which would be your buying signal for a position trade, then buy the stock. But as you can see for the weeklies, it's really not at a low. For the dailies, if you cut this chart into 1/7 and you just look in the past half year to 1 year's length, it's at a low. But I'm going to say this is a pretty good position trade because the stock is coming back. More people are putting money into the stock. Investors are getting more hyped about this stock, and it's probably a good time to get in. This is more of a speculative trade than the other four I just recommended, but this could bring us back to our highs, which were at 10, so this would be a 300% ROI here. The last one is CVM. Let's take a look. CVM and Morningstar. I hope this is not another biotech. I don't think it is. What is this? Yeah, it's a biotech. Okay. So I guess this week is biotech penny stocks. Got another biotech, cancer treatment. Whenever you put your money in cancer treatment, even if you don't even know anything about the stock, you're basically putting your money like on a roulette wheel number plus color, because if the company does find some sort of cancer cure, you're going to be rich, even if you put down a few bucks on it. Okay, so it's a good investment even for people who are poor or cheap. Obviously, the stock has not been doing well on the weeklies. It's been taking a slow dive toward the bottom, and the dailies show the same thing. Let's take a look at the weeklies first to see if this is a good position trade. Generally, any biotech stock that you've researched and feel you have reason to put your money in because they have perhaps a new technology coming out, or you like the management might have a very reputable doctor behind it, you may as well throw down $100 on the stock and just hold it. I've done that for quite a few stocks. Some have paid off, some I'm still holding on to. But like, it's not a huge investment to deal with. If you've heard of barbell investment strategy, where you're putting some of your money in really speculative stocks, and if they jump, you're going to make a lot. It's really not a big deal because you can take the same amount of money out as easy as you put it in, as long as it's not a stock that is depreciating really quickly in value. Alright, so here's the weekly for CVM. Obviously, it's oversold. For the long term, we don't see upward momentum. In fact, we're seeing a new downward momentum, which is a bad sign. And we've hit a low on the oscillator chart. But generally, when you see this low, it's gonna spike like a upward slope. That's a pretty good time to start watching the stock at the very least, if not getting in on the stock. I probably wouldn't get in for a position trade at this level, but I would probably watch to ensure that it's getting close to zero, and at that time I'd probably get in. In addition, I'd watch this red rune line and make sure that it is approaching 70 quickly. You'll see sometimes a dip downward and then a dip back upward like here, and you want to avoid that situation. So make sure it's getting really close to 70 before you get back in. Here was a mistake. Here would have been a mistake. Here would have been a mistake. But here you would have been pretty much golden. And if you got in at this time, well, if you got in when it hit 70 or dropped below 70, you could have ridden that up for almost 100% ROI. Okay. In terms of the daily, We see it dipping into the oversold region. So again, I'd probably wait. It looks like it's oversold, and a stock that's oversold could be oversold for quite a long time. It could be oversold for quite a few weeks. So you're going to want to watch as that dips into the oversold region and then bounces back out, and that's your good buying signal. What else here? Okay, so I think the reason I included this is probably the worst of the five, but the reason I included this is that the red rune line is seriously now way below 70. It's dipped below 50, and it's a good time to start watching the green line. If the green line and the red line cross, that's a strong buying signal. And when that happens, you're probably going to see these two lines begin to dip upward and get out of that below 20 region. And that's also a strong buying signal for a swing trade at the very least. I'm not recommending this as a position trade, I don't think. Let me look at the weeklies again. Yeah, I'm not thinking this is a good weekly trade unless you see this oscillator get really close to zero. So it's probably not a good position trade, but it's something you could probably make money on because the stock is oversold and you want to see a slight burst. You've probably seen these before. Let's see, like right here, there's a burst right there. It's kind of a mini pump and dump, and you can make some money if you closely watch a stock. Here we see another one. So if you don't have a lot of money and you just want to practice swing trading, this would be a good stock to use. But that's it for this week. Again, I'm sorry that I have been a little lackadaisical on putting these out every week. I don't intend to forget, it's just something that happens. But here are the stock picks for this week. This is the non-penny stock pick. They're all pretty decent. CVM would be a good swing trade. Everything else is probably better suited for a position trade. But go ahead and try one of those out. Either buy the stock or take perhaps the safer and more profitable route of buying a call option. And let me know how it works out for you. This is one thing I haven't asked for a while yet. But give me your feedback. Tell me how these trades worked for you. Recently had a guy say he made a bundle on a recommendation I made, which made me happy as well as him. He was financially happy and I was kind of egotistically happy. So please let me know if any of these suggestions have helped you make money, and I will look into the type of trade you like to do and make more recommendations of that type.